There will be a recession, and it will probably be more painful than people expect because that's what's necessary to structurally break the inflation problem that we have.
Sure.
At the same time, if any, I've been for a long, long time, like a year or more, talking about how this cycle would move more slowly than people
Mm.
expect, and that the point in which we hit recession will take longer than most people expect. I think it's interesting. If anything, it's actually played out a little slower than even I expected, and I was expecting it to be much slower than other people had expected. And so I think the basic question is, how much more is it going to take? The Fed still today, if you look at what's going on in terms of the economy, really looks one or two steps behind.
Mm.
That creates an environment that still continues to be okay for stocks, particularly relative to bonds, and continue to extend the cycle, right? If the Fed just keeps a few steps behind, inflation remains elevated, nominal growth remains decent, and the economy continues to sort of chug along as we've seen over the course of this year. I think the real question is, how long will it take for the Fed to then get ahead of the curve? Because
Mm.
that shift from a bit behind the curve to ahead of the curve, that will mark an important moment when recession will be on the relatively immediate horizon. And that's a time when you want to switch from being sort of long stocks and short bonds to being short stocks and long bonds. We're not there yet. The Fed hasn't done what they needed to do. And the question is, will they get there? And I think it's going to take some more pain from the Fed's perspective of inflation being a little too high for too long before the Fed finally says, you know what, we've really got to tackle this inflation problem.